This is AI Command App News for Wednesday, April 29th, 2026. I'm walking you through the AI and tech stories that move markets today and what they mean for your business. We start with earnings. Microsoft beat top and bottom lines for fiscal third quarter, and the headline number was Azure. 40% year-over-year growth in cloud, driven almost entirely by AI workload demand. CNBC and Investors Business Daily both flagged Azure as the standout segment, and Microsoft stock shrugged off what CNBC is calling the OpenAI shock. The news that OpenAI is actively repositioning its compute relationship away from Redmond. What it means for business. If you're an enterprise buyer of AI infrastructure, capacity and pricing are the lever right now. 40% Azure growth means demand still outstrips supply, which means your renewal in the back half of the year will probably come with a price increase. Lock in capacity early or build optionality across providers. Story 2. Meta. Meta posted what Investors Business Daily called its fastest revenue growth since 2021, but the stock slid anyway. The reason? Capex and Reality Labs. CNBC reports Meta's Reality Labs division lost over $4 billion in the first quarter alone. The market is asking the question every CFO is asking right now. When does AI capex start showing up in the income statement, not just the cap table? The business takeaway, Meta is the canary. If a company growing at this clip can't justify its AI infrastructure spend to Wall Street, the smaller players burning cash on speculative AI buildouts are about to get a much harder look from their boards. Story 3, and this is the one I'd watch most closely. CNBC reports that OpenAI's subtle drift from Microsoft has become an aggressive move toward Amazon. The compute realignment is no longer hypothetical. At the same time, The Verge reports ChatGPT downloads are slowing, which their analysts say could complicate OpenAI's IPO timeline. And the Musk versus Altman trial continued today, with Daring Fireball noting Musk appeared more petty than prepared on the stand. Read that together. The most deployed AI provider on Earth is changing its cloud partner mid-flight. Its consumer growth is decelerating, its founders are in court, and its largest distributor, Microsoft, is publicly diversifying. Every enterprise that built on top of OpenAI through Microsoft is now exposed to a relationship that may not look the same in 12 months. If your business depends on a single AI provider's contract, today is a good day to ask what your fallback looks like. Story 4. Semiconductors. NXP Semiconductors had its best day ever, soaring 26% on an earnings beat per Investors Business Daily. Silicon Motion sales more than doubled. Micron is gaining as the semiconductor trade springs back to life, MarketWatch reports. Quantum computing stocks are also being floated as the next big play after AI, according to Defiance ETF. The takeaway, the picks and shovels trade is wide awake. If you're allocating capital, the chips powering AI are still where the durable margin is, at least for now. And Story 5. Agentic commerce went mainstream this week. Visa stock soared after the company laid out a thesis that AI agents will be paying with cards. General Motors announced it's adding Gemini to 4 million vehicles. Uber announced AI voice bookings for travel and hotels. The connective tissue. AI is moving from chatbot to actor. Agents that hold credentials, make purchases, and execute transactions on your behalf. For business leaders, this changes a lot. Your customer support, procurement, payments, and analytics workflows are about to be invoked by software that needs API-level access, not human-friendly UIs. If your stack isn't agent-ready, meaning machine-readable, programmable, and auditable, you're about to be the bottleneck in your own organization. Quick hits before we close. China froze new robotaxi licenses after another Baidu safety incident. GitHub patched a critical remote code execution vulnerability in under 6 hours. NVIDIA is fixing the 8GB VRAM ceiling on one of its cards at a price. Anthropic, OpenAI, and Google all continue to compete for federal AI contracts, with the Pentagon's AI chief telling CNBC reliance on a single model is never a good thing. That last quote is the through line on today's news. Single provider risk. Whether it's a cloud, a model, or a SaaS vendor, is the topic Wall Street, Washington,